Welcome to Bears in Exile. Today is Thursday, December 1st, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Well, overall the market did what we were expecting it to do today. We were expecting a side to down, slight downtick following our gigantic candle yesterday. We did get that. We also got a small hammer. Not exactly the candle that you want to see at the top of a giant move, but nonetheless it's not a giant hammer. It's not super strong. We do have a new major price consensus level and minor price consensus levels for the new month, since this is December. And we closed below the major price consensus level for the new month. Not exactly a great sign, but also not the end of the world. We have again the bullish cross on the MACD. We're having the stochastic click up to 0. Downtick on the RSI, upticks on the stochastics, uptick on the CCI, and lo and behold, we were making a big note of the 14-day RSI moving average leveling out thanks to this run. Well, today it clicked down just a hair. So the possibility does exist that this could resume its trajectory and begin heading down again. I agree and disagree with both of that. I trust this indicator absolutely. But this is the place where the bears should counterattack. And I do think that that will happen as early as tomorrow. We have the candle, which is suggesting a possible reversal of some point. We had talked about in previous videos about a high, lower high, lower high, lower high, etc. going to here, lower high, question mark. That should be, that lower high question mark should be at the forefront of bearish thought. So, do I believe that the bears are going to take control and destroy all of this and make a new lower low? No, I do not. But I do believe that they are going to attempt to counterattack, and that will be of some significance or strength. The question being, we know that large candlesticks, the middle section of that candle is support or resistance based upon the direction in which we are moving, as well as the end of the candlestick. So we would need to see a break of 11,800 roundabout, and then a complete break of the complete candle. So we do have a level to watch, and it will be interesting to see how much power they have if they're able to overcome that. Now, when it breaks the 200-day moving average, which it should, if they do indeed do a counterattack, that should give them some extra strength. If they're not able to get through 11,800, even with that little bump, that little extra that they're going to get for breaking that, that will be a tell to me that it has failed and will be turning around for a test of the highs. Then again, tomorrow everyone could wake up and have euphoria once again, and we just go straight ahead to attempt the break. But I do think that we will have a bearish move of some value very soon. It does make complete sense if the 14-day RSI moving average starts to go down again. It makes sense if the stochastics turn around and start pointing down. We do not have enough data at this moment. We do not know, but certainly a possibility. Going to the 60-minute just to take a look at the health of the market in the intraday time frame and see if it makes sense that we will have a bearish move of some sort. Well, 14-day RSI moving average massively high. This should curl over and attempt to go down. That also is a clue that we should have a bearish move of some point in the next few market days. CCI very high, slow stochastic very high, fast stochastic pretty darn high, RSI massively high, histogram sloping down, almost at a bearish cross of the MACD. Yes, there is plenty of reasons why we should have a bearish counterattack very shortly. negative divergence on the MACD histogram, negative divergence on the CCI, negative divergence on the fast stochastic, and even the most mild of, yeah, you know what? I'm not going to count that. Not the RSI. So, bearish counterattack. Absolutely, it makes sense right here. Absolutely. SPX, little miniature spinning top, closed above the new major price consensus level. The stair tops in complete effect here should be on the bear's mind that this is the point where it should be turned away before it reaches this mark, which would be a test of the 200-day moving average. If we break the 200-day moving average, we know that this is broken. So something to keep in mind. Slight downtick on the 14-day RSI moving average, also a clue that we should have a bearish counterattack. Fast stochastic very, very high if it starts to loop over. Another reason why we should have a bearish counterattack. Slow stochastic still pointing up. CCI pointing up. Downtick on the RSI. Neutral on the histogram. Bullish cross on the MACD. 60-minute is the same as the Dow, so no need to rehash that. But I am looking for that. I'm not playing a possible bearish move at this time, but I do think that it is more likely than not. Now, if it was just that easy, it would be that easy. Now we have the VIX. This did not do what we were expecting it to do today. Yesterday we said outside of the lower Bollinger Band, the complete body of it, we needed a side tick, even an uptick, to get back inside of it and make it healthy. That did not happen. We got a side tick and down, closing just below the lower Bollinger Band, but we did get a hammer. Is the hammer enough for the VIX to spike up and the market to go down, also confirming a bearish counterattack? We don't know at this time. It did not do what it was supposed to do today. Maybe it did. Maybe we just need a bearish counterattack, and this is helping that to come about. CCI massively high, ticking up. Stochastics getting very low. Uptick on the RSI. Downtick on the histogram. Downtick on the MACD. Now here's the fly in the ointment. Downtick on the 14-day RSI. This should be pointing up, but it is not. So there is a possible issue. But stochastics can turn around and perform that bearish move that we were expecting, but we don't know at this time. TNA. Oh yeah. Closing below the major price consensus level for this month. We're still getting the cross underway with the middle Bollinger Band below the short-term moving averages. We're not going to have complete crossover and separation prior to the short-term moving averages entering the bar because they're entering it today, and we don't have anything like that. Side tick on the CCI. Fast stochastic leveling out, slow stochastic still pointing up. Slight downtick on the 14-day RSI moving average, downtick on the RSI, uptick on the histogram, uptick on the MACD. And the 60-minute time frame, just like the Dow, just like the SPX, negative divergence on the CCI, 14-day RSI moving average massively high. It needs to roll over. Stochastics actually pointing down, and ugly bar at the end of the day. RSI very high, pointing down. Down on the histogram, downtick on the MACD, negative divergence in the MACD. So I do believe, and those are my reasons, that we should have a bearish move of some sort. But I do not think that it will be successful in the long run. UUP. All right. Ended today with a hammer, closing above the new major price consensus level. 14-day RSI moving average still leveling out, not ticking up, not ticking down. Stochastics ticking down, downtick on the CCI, uptick on the RSI, downtick on the histogram, downtick on the MACD. And so, is the hammer enough for this to pop back up? Well, we haven't had a true test of the bar at this moment, but we have completed the bubble corrective move with a downtick of UUP. And I think it all comes down to the 14-day RSI moving average, if it decides to tick down or if it continues on its way up, and if we get a hook of the stochastics, which certainly they could do. Gotta watch this one further, but it's not performing poorly. FXE, the euro, it keeps getting close to 1.35, which is the proper valuation in my opinion. Even though it is, a tenth of a cent or 2/10 of a cent off from that target as of yet, that's pretty darn close. Ended today with a spinning top below the new major price consensus level. We are getting crossover in the middle Bollinger Band, looking for the bottom of the short-term moving averages. Uptick on the CCI, uptick on the stochastics, downtick on the RSI, uptick on the histogram, uptick on the MACD. 14-day RSI moving average ticking down. So it would be very easy at this point for the euro to have a down move, which would be bad for the market, which would be our bearish counterattack. 14-day RSI moving average is low. If it does continue to go lower, it doesn't have too far to go before it can have a reversal. So I do believe that that would line up well with a bearish counterattack that fails, and then this turns up and we're good to go. But that is my feeling. GLD spinning top. Downtick on the CCI, downtick on the 14-day RSI moving average, downtick on the fast stochastic, uptick on slow stochastic, side tick on the RSI, uptick on the histogram, and gain the bullish cross on the MACD. Still very close to having a double flat line, which would not be good, but that is what it is. We are below the major price consensus level for the current month, and we're going to have to see how that goes. But SLV, just not really much of anything. Not really a spinning top, not really an inverse hammer. Below the major price consensus level, getting the cross on the middle Bollinger Band, trying to get all the way below the lower, the short-term moving averages. Downtick on the 14-day RSI moving average, uptick on the stochastics, uptick on the CCI, downtick on the RSI, uptick on the histogram and the MACD. Mixed bag. Not really looking that great today, but it all comes down to Euroland. It all comes down to the NDE of jobs tomorrow, and not overly too much to say. The market did what it should today, and we need direction to see if we are going to have that bearish counterattack, most likely starting tomorrow. So if it just goes up, then that'll be all kinds of fun. But as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.